Thank you. Excellent.
You're welcome.
Good morning, everybody. I can see Phil and Ken and Eric. Eric, thank you for joining us after just the next day after your show. Congratulations on having a show. We're all pleased for you.
Thank you.
All right, we're waiting for a few more to join us, but we'll get going in just 1 second. While we are just waiting for a couple more to join us, first off, I want to wish our own Anna Osnauer a happy birthday today, and thank her for getting up at the crack of dawn in California to get this set up for us. 29 years young. We're glad to celebrate with you, and I'm sure this is exactly what you were looking for on your birthday.
Yes, exactly what I was looking for, and thank you very much.
All right, and I would like to welcome our old friends, Jack Butine and Mary Beth Ryan from Butine Insurance, or Risk Insurance these days, going to share their many, many decades of experience in this industry and working with all of us. So we want to get them going right away. I know we've got a couple more people still joining, so Anna will keep letting them in as we get started. But today's topic, as you know, is insurance issues in the events industry. And certainly the key issue these days seems to be cancellation insurance. So we're going to start with that topic. But if you have questions, if you have follow-up questions as we're going through, I've got a half dozen to get kicked off with Jack and Mary Beth. If you have any follow-up questions that I don't cover as we go through, please just add them to the chat window if you would. And if you have other topics as we get through, the first half of this session, again, please throw them up on the chat box, and we'll get to them as quickly as we can and try to provide as much information as we can. So, Jack and Mary Beth, again, thank you for joining us. As you know, this is our SISO Small Business Special Interest Group. So everybody here is pretty much all in the same boat. We're all organizers trying to keep our businesses going through this pandemic, and going forward and looking hopefully forward to next year, getting things back to some sort of semblance of normality. My first question really is on the cancellation that's all the cancellations have been caused by COVID-19 that are now expected to extend through the end of this year and into the first quarter at least of next year for many of us. Can you give us some idea of how successful organizers have been at seeing settlements from their cancellation insurance coverage?
Sure.
I'll let Mary Beth start with that, please.
Yeah, sure. So if you had CD claims early on were being paid out, they required a bit more forensic accounting due to the timing of things. However, subsequent claims, say July and onward, seem to be a little bit more straightforward because there's minimal expenses being incurred. So the time frame to settle a claim is a bit longer than normal because of the high volume, but not much. We've been pleasantly surprised at how quickly the insurance companies have settled the claims. And we continue as the broker to continue to stay on top of the claims to make sure that the process is moving forward as best that it can. But overall, it's pretty much usual status quo.
Which, considering the high volume, I'm assuming this is something you've never seen before in terms of the volume of claims going forward. I'm assuming that's pretty impressive. As you know, and some of the others probably, I've already settled 2 claims, and I've got 3 more in the process. The first 2, touch wood, went quite well and certainly settled at full amounts. What are you seeing as the pitfalls people are coming across in terms of what's slowing down the process for them, or what's causing them not to get settled to the level that they would think they should be?
So I would say that the timing of reporting the claims, very important. Early on, we were reporting every claim that every client that had CD coverage, we were reporting a claim, whether they knew that the event was going to cancel or not, because there's a time period there was a lot of unknowns. But we wanted to sort of get into the pipeline as soon as possible. And we found that that was very helpful. Getting back to the insurance company with the information that they're asking for is also critical as far as timing goes. So the more responsive that you folks can be on your end, obviously the better. And then I think just following up, staying on top of them, because they are inundated with claims. So it's helpful to be a pest.
Good. Yeah, yes, and as I say, from experience, unfortunately, I've gotten far too experienced at this already this year. I saw many have. Next question I had was, if an organizer didn't have communicable disease coverage in their cancellation insurance as the rider, is there any way that they might see some reimbursement from their insurance, their cancellation insurance, if, say, the venue was closed?
It's a tough question. Yeah, the short story is going to be, if you didn't have communicable disease, there's very little that anyone can do for it. You read a newspaper about business interruption. No. In business interruption, the issue with half the stories are written by law firms that say, we'll get your claims and losses paid due to business interruption coverage. The other half say not a chance, because business interruption is key to physical damage to an insured premises, and virus doesn't meet that standard. So kind of a short story. If you didn't have communicable disease, the answer is no, not much we can do about it.
So even if a venue has been closed by the city, by the state, because it's been closed because of COVID-19, that basically triggers the need for communicable disease coverage.
Yeah, that's pretty much it. You have this phrase, the insurance business has this concept of proximate cause. What's the real reason? Sometimes you can call it something else, but no, if the real reason is COVID, then we end up with the COVID exclusion.
Okay. Is communicable disease coverage available at all currently for future shows? If anybody's trying to write their cancellation insurance for the next year or year after, are they able to get CD coverage at all, even if it excludes COVID, SARS, MERS, H1N1, all the known epidemics?
Not at this time. We asked that question yesterday. I remember we talked to Lloyd's folks this morning, but I think the answer is still, the short story is not at this time. My bias goes back to 9/11. Right after 9/11, there was no terrorism coverage offered. And all of a sudden, months later, terrorism snuck back in. But this is a bigger insured loss for the cancellation event industry than 9/11 was. So it'll be a while before we see communicable disease, unless we have an update this morning.
And the only thing that I'd like to add to that is early on, after COVID came to be, insurance companies were offering communicable disease excluding COVID. And I think that was available for, I'm going to say a month, if that, maybe 3 weeks. And then as long as it went on, insurance companies realized we can't do this. We have no idea what the future is going to hold. So they took it out and excluded it altogether.
I think, in fact, I think SISO's policy was one of the ones we renewed in March that did still have CD coverage, but excluding COVID.
Right.
Yeah, as it went through. One of the other questions that's come up, and I know for myself, when we insured our business, we didn't think about this at the time, but is it possible to insure loss of management fee income for a show you manage but don't own?
So typically, the contract between the show management company, the association and the management company would typically exclude any management fee if the show didn't take place. The expenses that the management company incur is something that would be covered under the association's policy. However, the fee for the management company is something that should be insured outside of, in other words, the management company should buy their own form of event cancellation policy. And we talked to Lloyd's about this exact thing recently, and they think they can come up with a policy that would be able to cover management fees.
Okay.
It's new. It's not something that's been done in the past. A form of it has been done, like promoters, things like that. But more to follow on that.
Okay. With all these claims going on, and I know we've chatted about this, but people have asked, is there any risk of the underwriters running out of money to settle all these claims? And, while we think obviously this is a huge business interruption for our industry, and the claims in our minds, certainly, I've heard of $10 million settlements, I've heard of bigger ones. We're seeing big numbers, but in the great scheme of the insurance industry, how big is this compared to, major catastrophes, hurricanes and terrorism and other things like that? How does this fall, and is there any risk of these underwriters not being able to pay claims?
That's a short, the insurance, you ask the insurance folks that, the short answer comes back, no, the industry is not in danger. You can go into a lot of details there. But in the overall scheme of things, event cancellation is not a big part of the insurance market. It's big to folks like you all and us, but in the overall insurance marketplace, it's not a big deal at all. And the players that do write this kind of insurance, they're heavily reinsured. Reinsurance, great insurance term, it just means insurance folks, insurance companies buy insurance. And the reinsurers that sell that kind of insurance, they buy insurance. And there are buzzwords that go along with all that layering, but because the insurance companies are pretty well protected themselves. And you'll find underwriters exit the market. So they're the folks that used to write the insurance don't write it anymore. Many of them don't write it anymore. Because, for years, Mary Beth and I and other folks as well have been telling buyers for event cancellation insurance, you got to lock in 2 and 3 years in advance, which is really a good idea, because the next year the rate's going up. I told people after 10 years, but the problem was they never went up. So the rates went down lower and lower. Now all of a sudden we have specter of bigger and bigger claims. And that will cause underwriters to say, hey, look, this is not fun anymore. The chance, risks we didn't understand. We never priced in things like worldwide is a great insurance buzzword called black swan. Black swan is something that's never happened before. There's supposed to be no black swans. World War I was a black swan. 9/11 was a black swan. This is the first ever pandemic like this in our time. This is a black swan type event. So that specter out there is what's causing underwriters to drop out, and not in the smaller and smaller marketplace. That causes disruption. But to answer your question, is there any threat of insurers not being available to pay covered loss? No, there's no danger in that.
Because through the various levels of reinsurance, there's a very wide pool of people involved in underwriting or ultimately all these claims, correct?
Correct.
That's it. They're all the layering that's out there. You hear of it, you mentioned earlier the concept of Lloyd's names. They're an unlimited personal liability. Well, that's not really true anymore. It's most of the guarantors at Lloyd's, which is this marketplace everybody likes to talk about. It's a great big building, and there are little boxes in there, little cubicles where folks stand, and they take risk. Whether they get all or part of your last show, or all or part of the next show, or some people will say, we don't do public shows. Another group will say, well, I love public shows. Yeah, another group will say, we do medical shows, or we do, manufacturer shows. All those various groups all get together, and they mutually support each other. And no, there's just no threat of this disrupting, bankrupting the event cancellation industry.
Good. Well, that'll give us all a little peace at night.
Back. Let me add one more thing to that. a lot of, when claims were not as frequent as they are now, you would get issues where it was a $600,000 loss. And we'd say, look, the answer is 600,000. It may take you 6 weeks to come up with the backup for that 600,000, but on your balance sheet or your balance sheet, you've got a line item on there, an asset item, insurance payment receivable. I mean, you can definitely bank on a covered insurance claim.
Good. We've had some, we've had H1N1, we've had MERS and SARS. How widespread were the claims on those? And obviously this is now global. Were there regions that are not as involved in cancellation insurance as we are in the States?
Think about that one. The only H1N1 claim I ever heard of was a nursing show in Canada that canceled because of the specter of H1N1 in the hospitals that the nurses and doctors came from. And the attendees had to leave and go back home. It wasn't a huge deal. I remember us thinking of claims while I'm talking,
Yeah,
but I don't think we had any. We heard about them. We excluded them from time to time. Like SARS and MERS and H1N1. But as far as an actual impact, the New York Gift Show went on every time, and all the LA shows and Las Vegas shows. As far as I know, none of them were. This one is that black swan we talked about a moment ago. Never been this big before.
Yeah. SISO, as I think everybody knows, is part of the Go Live Together coalition, which is advocating for the needs of the industry as we reopen and move forward. And one of the key legislative issues that we are supporting is the idea of a government-backed insurance program like TRIA that happened after 9/11 with the Terrorism Reinsurance Act to provide communicable disease coverage, again, to events, say, like TRIA, which is still in place now almost 20 years later. And there's already a piece of legislation out there called PRIA, from Congresswoman Maloney's office and the Financial Services Committee. What are your thoughts on the likelihood of this legislation coming to fruition and us ending up with a program similar to TRIA, similar to the flood insurance, basically?
I think it's a great idea. I mean, it's the only idea that made sense to me. Is somehow it's basically TRIA is basically a reinsurance program. So it's a backstop to the insurance companies if they start paying a terrorism claim. Mm-hmm. Most of the money is still going to come out of the insurance business, but they'll set like on TRIA, it's $100 million claim. After the insurance company pays that out, then the government steps in with this backstop fund. I think the magic to TRIA, if they do get it going, it's an election year, which there's all kinds of things on the table. So whether how soon it's going to come to fruition, but the concept of it makes sense to me, because if you turn the next communicable disease issue into a covered claim, what you get is all the insurance companies adjusters. You don't have lawyers out there trying to settle claims and sue folks. You stop selling pizzas, your restaurants closed, your car dealers closed. Kind of hard to prove it for in the trade show world, but the trade show doesn't happen because of this COVID. The next pandemic, you will pull in insurance adjusters, and you've got a backbone to settle in the claims. So whether it works, I had no idea if it comes to fruition, but to me, it makes the best sense.
Well, the challenge was saying, I mean, the industries, the Chamber of Commerce and our own and others obviously are in support of it, and it's got quite a broad coalition supporting Congresswoman Maloney's initial bill, which is the first that came out, which was based on TRIA for obvious reasons. But we understand that the insurance industry has come out somewhat against the idea. And my very brief understanding of it is because they're still, the initial concept is that the insurance companies, like you said, would be on the hook at least for a percentage of the claims. And even if it's only 5% if they think that it's a big enough potential issue and it's been talked about being put in place starting January 1. I'm assuming that their position is that even if they don't have to pay a percentage, if that percentage is multiples of what their premiums are, obviously the risk is too high for them.
Well, there's only so much cash in the insurance business. And everybody, the widespread impact, it would take huge government support. The reason it made sense to me is you've got the settlement process. You have the backbone of the insurance industry and their adjusters and claim settling people and all. But as far as the finances of it, definitely without huge government support, bankrupt the insurance industry.
Yeah. Well, we'll keep everybody up there. Actually, Tony's got a question he put up here that's a continuation of this. He's asking if there are any potential future non-COVID risks which are not insurable, i.e. social protests, riots, disputed elections, great, government shutdowns, airline bankruptcies, etc. Are any of those not insurable?
That's a really good question. And only Maribeth start that one for me. That's something that never was an issue for us. You want to insure an event in Saudi Arabia, want to insure an event in Kuala Lumpur, we always could do that. Sometimes the buzzword is civil commotion. There are some programs out there that just flat no-go civil commotion anywhere, including all over the United States. So with that, Maribeth.
Well, yeah, so I could speak to our program does not exclude civil commotion, but there was some other programs where the timing of their reinsurance treaties, the renewal of their reinsurance treaty, happened right as the protests started across the country. And so some of the programs, because of the timing of it, the reinsurance companies pulled out because they covered civil commotion. So the only way to continue the policy was to remove the civil commotion coverage and put an exclusion on there. The other exclusion that is out there now, again, not on our program, but national mourning. That one I'm not really sure why they are excluding that. But so those are the two. Other than that, again, there are programs out there that will cover civil commotion. Strikes are still part of the policy form, earthquake, tornado, your typical weather exposures, blackouts, all that stuff. So I can't really think of anything in the future that might be excluded.
My understanding, Maribeth, is from our many conversations, is that it's typically known. So you can't, for example, buy coverage, a week before your event when you see a hurricane bearing down on Miami. Your SOL, it's too late. But you can obviously buy the coverage a year out when there's nothing named and nothing expected.
Correct. Yeah, typically we were always encouraging folks, as Jack mentioned earlier, to buy, if you can, buy 2-3 years out. If you have a contract with your venue already lined up for 2023, you should be insuring that event. The moment you start incurring expenses for the event is when you should have the coverage secured. But on the flip side, the rule of thumb is 30 days prior to the event, and really, you could probably buy it 2 weeks prior, because that's sort of when the weather is going to be for that event. Insurance companies typically won't issue a policy within 15 days of an event. But that being said, you should buy it well before then.
Well, and we've all seen lessons from that. We know of, and I know of an organization that typically didn't bother signing their insurance until early spring for a major late summer event. And obviously early spring was March, and it was too late once everything got out. So that was a very expensive mistake for them. The advice of a year out is certainly a good one. A couple more questions that have come up. one was asking about the documentation, what backup documentation the insurance company is looking for. And I'm assuming, and two-part on that. One, again, having gone through this, and correct me if I'm wrong, Meredith, but on the front end, they want to see a contract for a venue. They want to see a budget. That's pretty much the two key items when you're signing up that they want to have. They don't want you to come back later and say, "Oh no, I meant this." So when you sign up for the policy, they're looking for a budget. They're looking for a contract on the venue so that it's set. This is where it is, when it is, and this is how much you're expecting. Those are the sort of the pre-paperwork documentation aspects. Correct?
Absolutely right. On this, as far as the budget goes, most programs only want to see a show budget if the event is over $1 million in gross revenue to issue a policy. But once an actual claim happens, it's very important to have your show budget available, organized, ready to go.
At some point, we'll get past these COVID claims and in the show industry, we'll get back to having live events. We always thought sort of the pro tip is when you go to your event, you see your event coming, know what your attendance history has been. You know, in the days before COVID, you would have a flood in the Javits Center and you lose 1 out of 3 days. Well, we go down and meet with you just when we happen to be in New York. And when you knew you lost 1 out of your 3 days, and you already had access to what your attendance history was. Traditionally, 1,500 people come to the show, roughly 500 a day. Lose 1 day, well, that's 500. That's 1/3. But so you kind of calculate what your event cancellation payment was. But the key was you had access to what your attendance history is, what your revenue history was, that kind of stuff. That's a great when we get past this pandemic spate of claims. Knowing your event's history is critical to quickly settling a loss.
And on the back end, after a claim, again, having been through this a couple of times, I know that what I was asked for, and we were able to provide on the claims that we settled, clearly, they wanted to see proof of contracts. And the first 2 events we canceled in March, we canceled 10 days out. So obviously we had most of the shows or the events sold. We had all the exhibit revenue in for the most part. We had spent some money, but not all of it, obviously on the expense side. So they started looking in detail at the revenue to prove that it was there, and the expenses over $5,000 were the ones they really focused on, and proving invoices, contracts. They weren't willing to pay for speakers, for example, where there was an out clause in the speaker agreement, but they were willing to pay for speakers that cancellation wasn't allowed, that sort of thing. What I'm interested to see as we go into my own claims for later in the summer is when you had an event that was now 6 months out, and basically for 6 months you really haven't been able to sell a heck of a lot because people have been waiting to see when it would end. It's going to be much more interesting to see how the insurance companies, the underwriters, address the revenue that you budgeted but weren't able to secure. Again, they seem to be going back 3 or 4 years to look at it. And if you've got a good track record of hitting those numbers, they seem to be pretty reasonable about it. But I've also heard of another organizer who had a new launch and obviously had no history. What are you seeing happen in those situations?
I don't think we have a real claim on a new launch, but reasonableness is the best rule of thumb there. If I was launching a new show, I would have done a study. I would have made a guess. It may not have been my first ever show launch. So we had a tough settlement in this environment, but still, the best rule of thumb is reasonableness. What made sense to you, the show organizer? Why did you pick $600,000 as your revenue? What studies did you base it on? What experience did you base it on? It's a hard standard to prove, but reasonableness is a good way to look at that. It has to make sense to somebody. And Mary Beth probably embellish that a little bit.
Yeah, I would only add that we haven't had a new launch claim in this environment. Actually, I don't think I've ever had a new launch claim. But I agree with the reasonableness, and I think that Yeah, I mean, I'm trying to think of a lot of times insurance companies will only insure expenses only on a new launch. So that's another angle to take. But yeah, again, the reasonableness. Yeah.
Okay. A few more questions here, and then we'll get on to a couple of other topics. Once you buy a policy, is it as easy to change the show venue and dates as it used to be?
Very best. Sorry, I'll give you the short answer.
Yeah, this is, I spend most of my days with this. So it's become more and more challenging for a few reasons. The overall market continues to evolve. And when I say continues, it's really on a daily basis. So it's anything that we used to be able to do prior to COVID is out the window. We cannot promise our clients anything. Everything has to be approved by the insurance company. Some insurance companies have already exited the marketplace. For example, Swiss Re was a big player in the event cancellation world. They ironically left the market on January 1st, so it had absolutely nothing to do with COVID. So they're seeing a lot of claims regarding event cancellation, and trying to make a change to a policy where a carrier is no longer in the marketplace is very, very difficult. You know, the other thing is that the policy that you purchased now or prior to COVID or during COVID, now it's the premiums, the rates have already increased significantly. So that's another factor that's involved, and also the shrinking market. So the policy that you bought prior, maybe now the coverages are different. The civil commotion is no longer available, or whatever it may be. So insurance companies either are agreeing to changes with additional premiums, or they're saying, no, you have to write a brand new policy if you want this change. So it all depends on the carrier and the situation.
Sort of the constant is you've got folks like Mary Beth and I that are, you know, on your side, do a high volume of this business. So even though the sands are shifting all the time, still a lot of the business for event cancellation comes through our office. And even though the underwriters say, hey, look, we're trying to be tough guys, they also know that those folks have to stay in business. So I always think that's kind of a basis for a deal.
On that, Jack, I mean, what percentage of the shows this year you think had communicable disease coverage in place?
That's a tough question. What we usually say, what percentage? You want a number? It's in head count. I don't think it wouldn't be great, because the big claims come from folks that are fairly risk adverse or very close to the insurance business. Or if you borrow $100 million to buy somebody's $35 million trade show, you know, everybody thinks that was a great idea to buy communicable disease. Those folks. When you get down in the $10 million or $5 million gross revenue shows, and we always think in gross revenue. You folks think in net square feet, I think, but I always think in gross revenue. No,
we always think in money. Let me tell you.
You're my kind of guy. That's why we get along so good. Speak same language. But those $10 million shows in last generally did not buy event cancellation insurance. If you think about it, so first, no one dying to spend too much money on insurance. And event cancellation is important. Terrorism, it used to be a huge charge. That part about the insurance gets cheaper and cheaper. We're giving away all kinds of terrorism insurance. Now, once this smaller, more entrepreneurial show organizer bought the insurance, saw that what it cost and all the various options, and the last one was communicable disease, and who'd ever heard of a communicable disease loss? That usually got dropped to the wayside. So the answer is not very many, unless if you were a huge show. I always think it was Mary Beth and my idea that we beat you to buy an event cancellation that included communicable disease. But now everybody takes credit for that idea. But I think the percentage, not very great. Not very great.
That's and that's interesting because I think back to most associations I always thought were risk adverse and were taking coverage on their shows, but I always wonder, like the CD rider is sort of that afterthought that not everybody really paid enough attention to prior to this year as it went forward.
We have a few big show companies, but in the 20 years we've been insuring them, never had a hint of a loss, not even a threat. And those guys and gals just didn't buy it. They bought it because their board told them to buy it. They didn't tell them what to buy. They said buy event cancellation, and that was it.
Yeah.
Very rigorous and in minimum whatever. And
well, some of the larger, I remember my time at Messe Frankfurt, and Messe Frankfurt was one of those broad global companies that basically self-insured because they figured they had 200 shows around the world. What was the likelihood of them all getting affected at once?
That kind of thinking is tough because self-insurance is like homeschooling your kids. Self-insurance is a slim difference between self-insurance and no insurance, because unless you have the self-insurance has got that connotation of you put the money aside each year. You're not paying your $100,000 insurance premium, you're putting that in the bank. That's self-insurance. If you just don't buy insurance, don't put money in the bank, that's just no insurance. But you're right. It's a tough call. Hard to come up with that percentage.
Yeah. Okay. Curious. On the policy ideas again, can you cancel a policy if you decide to cancel the show? I think I know the answer to this one.
Everybody says this every day.
Yeah, I'm the one that gets all the bad news. So the answer is no. You can cancel the policy, you just won't get return premium.
You don't get anything back. Yeah.
No, and the reason for that is that the policy is 100% fully earned at the time that you buy the policy. So, the insurance company technically is on the hook from day one. So there could be a loss, a full loss, the second day you buy the policy. So that's the reason behind it.
Well, yes, the theory is you buy a policy a year out if you're doing it right, and the day after, the building falls down and isn't going to be back up, you're covered. Can you insure a virtual event, and what are the risks for such an event?
That's another tough question. Everyone thinks that's a great idea. It looks like a great thing to do. The virtual events, underwriters have a hard time capturing what the loss really is. If you insure football games and whether it's anything from Miss America pageant to football games, there's satellite. The issue is always being redundant because it's a live sporting event. You can't reschedule the Super Bowl. It's going to start at 6 p.m. on some day in February or something, and you can't reschedule. If you have a virtual boat show, I keep hearing like virtual shows. There'll be some server issues and lock up, and we'll reschedule it to next week, and you run it again. Where's the loss? So there's no good way to insure a virtual show just yet because it's hard. It's more of a technology exposure. It's like, who are you doing business with? Do you take the management of the platform in-house, or are you doing business with a contractor to stand up your virtual show? It's like you control the loss. So we're having a hard time coming up with how to insure that, because the question is, what's the risk? If it doesn't work today, what can I do? Well, can I do it tomorrow? Just reschedule it, take another shot at it.
Another question that came up that again, I think I know the answer to this, but if you can't insure against COVID-19, why get cancellation insurance?
That's our favorite question. Eventually, we'll be back in the live show business. I always think the two things for 100 years, I always thought the two things we have going for us is, we think the show's got to go on. And the exhibitors think they got to, nothing happens until somebody sells something. So we're eventually going to be back in business. And, there are perils out there. We still have strikes, less so now, but civil commotion is not excluded, and it's happening more and more. But you have power goes out, adverse weather. It used to be the most common claim was due to bad weather or venue fire or flood inside the venue. So, the traditional perils are still out there, whether you're a farm show in adverse weather, because it's an outdoor event, whether you're a convention center where someone left a pipe on and the sprinklers flowed until it flooded out, all 1D. The traditional perils are still there.
Yeah, I've been in that hole. All right, before we go into our other topics, any more questions from any of the audience on COVID, or have we done it to death? Oh, Ken's got one. You want to ask it, Ken?
Yes, I was trying to undo my mute. So if you're forget cancellation insurance, we don't have cancellation insurance, but just regular insurance is predicated on gross revenue for your shows, correct?
It depends on the policy. Event cancellation is gross revenue. That's correct. But your general liability is based on attendance or head count. Those sometimes square feet, but basically it's an estimated premium based on you thinking whatever your attendance was. Then you pay a rate based on pennies per attendee.
So it's either based on attendees or gross revenue. Those are two different.
Those are the big ones. Yeah. The other big policy is workers' comp, which is payroll.
So if you have no attendees or you have no gross revenue, why would the policy still be in effect? Or why would you still have to pay? Why couldn't you get a rebate on the policy? And let me ask the question differently. So insurance companies can audit you on gross revenue or attendees after the event. So if your event was more successful, they can audit you and say, oh, you owe us a little bit more money on the premium. So if that's the case, if you owe more money on the premium if you're audited, then why wouldn't you get money back if you were audited and you performed less?
You absolutely will get money back. I think that's one of the great questions. I always thought it was kind of a one-way street. In years, my 20 or 30 years, it's always kind of a one-way street deal. You tell me there's 8,500 attendees at your show. If it turns out there's 15,000, well, no one really ever asks you. You're not a publicly held trade show company. You don't get a whole lot of attention from the insurance company, and it's kind of a one-way street deal here. But insurance companies, they're applying the rules now, which is fair to everybody, but it's kind of most fair to folks like you, Ken, because you put down you pay your premium based on 8,500 attendees, whatever the number is, and you really have 2,500 attendees or zero. You'll definitely get a large part of that premium back. Sometimes, buried in your policy, there are some, there's rates per head count, but then you got, some charges that are flat charges, so you're not going to get those back. But you use the word audit. Yeah, the portions of your premium that are auditable, you talk to your agent or your broker and say, hey, look, this is not like years past when it was that cool one-way street kind of a deal. This year we want to apply the standard and be sure to audit me. Sometimes if your policy just renewed and you paid your premium based on 100,000 attendees, and there's no way in hell you're going to have 100,000 attendees. If it just renewed, sometimes you're flexible enough, the brokers are sometimes flexible enough to call the insurance company up and say, hey, quick, before you issue that policy, before you hit print, switch it from 100,000 to 20,000. And by the way, we're going to pay you a whole lot less. But that's a timing issue, but your policy probably didn't just renew yesterday, and you definitely will get a return premium. 100%.
Jack, that depends on the type of policy. Your traditional event cancellation insurance policy is not going to have any sort of audit feature or any sort of return.
No, it depends.
And I'm not talking
you're talking about general liability.
Not general liability.
Okay, and that's also true with workers' comp, as you say. I mean, typically we all are used to getting an audit, workers' comp audit, and ending up having to send them another check for some reason. But if your staff cut in half over the year, then I'm assuming that your workers' comp premium should be substantially reduced as well, Jack.
Correct.
Absolutely.
Correct.
Okay. Couple of other questions here. John had one that that I think is valid too. If you had insurance and you have a keynote speaker who got sick and the event was insured, but the keynotes came down and your attendance was down because your keynote speaker pulled out a week before, whatever it may be. Would insurance have, even though the event went ahead, but the attendance was down, does your insurance cover for that?
Let Mary Beth answer that one, I think.
Yeah, you would.
Because the only time we've done that in the past was like, we had Tony Blair one time as a speaker who had the coolest title in the world, ambassador of the eastern half of the planet. And but Mary Beth has the answer to that one, I think.
So if a keynote speaker is going to affect the non-appearance of a keynote speaker is going to affect the show, then our recommendation is to endorse that keynote speaker onto the policy, so the underwriters can underwrite that keynote speaker and charge accordingly. And that way it's cut crystal clear that you have insurance if the speaker had some kind of non-appearance. It would have to be a substantial reduction in attendance too.
And that brings, I recall there's several questions in the application that we fill out with you all, and one of those is there a keynote speaker that affects the attendance of the event, as I recall.
Right.
Yeah. Okay. Any other questions on the cancellation insurance side of things from anybody? If not, we'll jump into a couple of other ones. One of the key issues I think on a lot of headlines these days is cyber security issues and cyber threats, data loss in particular. Now we've got GDPR, and we've got the California Data Protection Act and Canada's Data Protection Act and what have you, and we read about companies almost every week, it seems, getting huge data losses from hackers going in there. What kind of cyber threats and coverage are you looking at these days?
Well, I mean, we've definitely seen a major uptick in cyber claims during COVID-19. Ransomware claims are rampant. We had a client that had a ransomware claim, $7.5 million ransomware claim that shut them down for 2 months. And the bad actors are getting more and more sophisticated. They infiltrate your system, and they sit in your system for months at a time, and they wait for the perfect opportunity. And it's very important that you make sure that your policies include all the bells and whistles that are available. Business interruption insurance due to a cyber attack is key to have in your policy. I don't know, Jack, do you have anything to add? But that's what we're seeing, major uptick in cyber claims.
No, that's it exactly. That business about the bad guys getting inside your system, sort of laying in wait, is given rise to a new type of loss called invoice. It arises due to invoice manipulation. They'll sit there and watch. They'll notice that Ken's the boss, and he sends $40,000 every other week to somebody. And then once they get the rhythm, they'll wait, and they'll say, somebody will impersonate Ken, tell the person that executes the check, this is Ken, because they know they can try that on Ken. He's too smart to figure that out. They're not going to slip it by him, but they may slip it by the accounts payable clerk. And they'll tell them to change the payment instructions, which brings up the great tip. I think the pro tip there is whenever you make an arrangement where you have a contract with some vendor, you put in the payment terms probably in there where you got to pay them within 30 days. But somewhere you put in there that there's no deviation from these payment terms is permitted without personal voice communication from Jen, from Alan, from Ken, from Chuck. Just something in there that is, this cannot be, to try and defend against these bogus, or what's the new term, the hostile cyber actors, bad actors. So that, no, that's a big issue. We have a lot more personal identifiable information, which is the buzzword, than you think. I mean, we have, you've got, look at all the vendors in your systems. You got banking information on people, that everybody you pay, or everybody who pays you by the credit card. People you pay, you may be using ACH, so you've got their banking information. We have a huge amount of private data in our systems. And this insurance is not expensive, but it kind of comes in two pieces, where you got the liability part, where you may inflict a financial harm on somebody else. But then the bigger threat is, you're less likely to destroy my credit rating if you get hacked and I'm one of your exhibitors. But the system is more likely to start inflicting pain on you. Every state's got these cyber breach response laws, or breach response laws, where you've got to hire law firms to send letters to every single body in your database, tell them that their private information may have been exposed. Then you got to offer all those people 1 or 2 years of credit monitoring. And then you got to monitor who takes that stuff up. Then you have to go hire white hat hackers and all that stuff to figure out why your system got penetrated. But all that stuff is covered. There are great insurance programs out there. And big broker, now Mary Beth and I were part of a big broker. And big brokers have these proprietary systems that work great. They're very easy to underwrite, and if you don't have one, I mean, it's give somebody a call. But it's easy to come up with, critical in insurance.
Well, that's given me some nightmares. The another issue is
insurance.
Yeah. Oh, okay. All right. I'm not sleeping enough. Employee issues. What's the latest issues these days with employees? We've all got workers' comp. Is workers' comp covering potential threats from COVID? I mean, we're now sitting here thinking, okay, we're starting to get back to work. We're hopefully going to hold shows again soon, and we've got to send people to run them. We need our employees to start traveling again and start working on site again. What is that a workers' comp issue? Is that do we need our own liability coverage for that? Is that already in our liability coverage? Where does that stand?
Yeah, there's no short answer to that question. That's a great question. I thought that was the best. We got 8 minutes left. I hope that's not the last question. That's a great last question, because it's so all-encompassing. Workers' comp is not designed to pay for infectious disease claims. However, workers' comp is designed to pay for worksite. It was designed 100 years ago to compensate folks for worksite injuries. Injuries that occur in and out of the course of the employment. One's employment is kind of the buzzword. But if I'm your employee and you send me to downtown Miami, where everybody knows that's a hot spot, but you want me to go there to do a pre-site show inspection, and it's known that's a horrible place to go, and you sent me there anyway, that's probably going to be a workers' comp claim, because I went. It's likely I got it. But nearly any other allegation, yeah, it's a high bar. We can certainly report I'm your employee in our example now. I show up one day in your office and say, I'm not feeling too good. I go home that night and I think, gee, I think I got my virus from your office. Well, you can try and report, and we can report that to workers' comp, because that's my only remedy against you, my employer, is workers' comp. But it's going to be a very fact-driven situation. Your office is outside Atlanta somewhere. Georgia's very low threat right now with coronavirus. What's the chance I actually got that in your office? How do I prove that? How do I prove I didn't get it from my son who came home from college and partying with his football team buddies? I didn't get it in the Starbucks. I didn't get it in an Uber cab. So that's very difficult. But you still, the reason I think that's such a good question is that we're going to go running shows again. The best, exhibitors are going to say, hey, I got my virus at your show. The best defense against that kind of an allegation is good procedures and protocol. When you go and you're setting up a show somewhere and you're looking at your show, and boy, we're going to be ready to go in the first week in December. and you're really looking at the way this show actually works. And you figure out what are the things where you can transmit virus. Then you look and see, well, what can we do? Can we eliminate any of that stuff? Like when we're checking in, can we don't use cash, just use credit cards, and where we stand and the kind of things you see in the food stores. But how can we engineer out the biggest amount of our threat of transmitting this virus? And that's your defense to all the claims you're talking about. The proof, because it's getting tougher and tougher now to have insurance coverage. Workers' comp is okay, but you go to your trade show, and we just checked this morning with a number of big event liability insurers. They're not covering. If Ken, you renewed your policy on Thanksgiving, well, you don't have an exclusion for COVID-related claims. But Eric might have renewed his policy on Valentine's Day. Well, that exclusion was probably there by then. So now your exhibitor is going to come to your shows and they say, hey, look, I think I got that virus at your show. We have to deal with that claim, even though it's a high bar. But the defense to the claim maybe gets paid by your insurance company. That's possible. But the defense has to be against any negligent claim is proper procedures. You did that risk management plan. Maybe I think the risk strategy's got a great safety consultant. He's a consultant to the Javits Convention Center, so I think we can give you his name. He's a terrific guy. And you come up with a plan from one of those type consultants, and it may not make you bulletproof, but when that allegation made you and you're back in business and someone says, that virus belonged to you people, that your defense is, we did everything we possibly could. The last part
Jack,
about that plan is,
yeah, that follows on. Right now there's a lot of discussion about getting business liability protection built into the next stimulus bill that comes out of DC. But we've already seen several of the states, I think it's up to 11 right now, either passing or working on passing their own state-level business liability protections. But in all of these cases, and hopefully we end up with a federal one so we don't end up with a mixed bag patchwork quilt across the country of different ones. But all of these discussions do revolve around the protection being based on companies following along standard industry guidelines or standard protections in that area. So if you simply do nothing and you don't have, it's like the old adage, we don't allow kids to run around a trade show floor during setup because there's forklifts driving around and they, taking their heads off. It's the same thing with this. You've got to have some standard protocols in place. You've got to be following at least the minimum guidelines put in place by the city or state you're in, whatever it may be. You can't just say, not my fault as it goes forward. So we're expecting to see this sort of protection out there, but we still have to, for it to work, we still have to follow the guidelines, have processes and protocols in place, and provide as safe as is reasonable, not possible, reasonable, out there, right?
That's it, exactly. I think one thing to think of too is if you're gonna have to collect a big claim, you have to have a loss, right? You have to cancel the trade show. You have to be a brain surgeon and get hit by a car. You actually really have to have a loss. But in COVID, if I go to your show and say, look, I think I got that virus at your show. Well, what's my loss? I got to stay home for 2 weeks. I'm going to go to the doctor, but I have medical insurance. So it's buried in all these sort of everyone's trying to protect themselves. You still have to have a loss.
Well, the nightmare scenario, I think the nightmare scenario for any of us is somebody comes to an event, gets sick, goes home, because we can put all the waivers we like in place saying, you're coming to this event understanding that you could get sick. But if they go home and pass it on to their 90-year-old grandmother who then dies, the 90-year-old grandmother didn't sign a waiver saying she didn't mind a kid going to the event and getting sick. So that's sort of that nightmare scenario. Of course, proving that it was our event that caused it is obviously a lot tougher than it can be. But that's where we're all sort of sitting. And it ended up being our last question, Jack, because we are at
that was a good one.
11:59, and we're cognizant everybody has another Zoom call, I'm sure, to go jump on at this point. But Mary Beth and Jack, thank you very much for the time. We really appreciate it and the sharing. We have recorded this session. Thank you for allowing that. And Anna will get this up on SISO's website in the next 48 hours, so that if you have colleagues or friends that missed it and weren't able to join, please do let them know they can play it back over a cup of coffee. And all of you have a great rest of the week. And let's look forward to having shows soon.
You bet.
Take care, everybody.
Thank you.